Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Norah, Mulinda, Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so check us out there. As John was just reporting, Meta, big earnings numbers last night after the close. Stock up 11.5% here today. All-time high, 52-week high, whatever you want to look at it. We're on a $2 trillion market cap watch here, $1.95 trillion as we speak. Let's check in with Kurt Wagner, tech reporter for Bloomberg News. He's in Denver, Colorado. He's worked out this scam. I have no idea how he did it, but it's a good gig for Kurt. Kurt, talk to us about Meta here. Some people feel like, Meta might be a little late to the AI party. I don't think that. And I don't know. Zuckerberg was talking pretty aggressively about the spending there. What did you take away?
I don't think they're late at all. I don't think that they have offered some of the same products that some of their rivals like OpenAI and Anthropic have, Google. So they have been building AI models for, basically a decade. They mostly kept them in-house. They use them, in this case, they've been talking a lot about how they're using them to improve their own ad targeting and their own content recommendations. And so while they're not out selling access to their models in the way that rivals are, they're still building them. And, clearly the street's very happy with what's happening here, which is that their ads business, which is powered by Instagram and Facebook, is just a cash printing machine. And they are taking all the profits from that and they're, funneling them into AI. And yesterday we saw that the ads business is doing better than expected, and they're spending even more on AI. And that is a combination that people seem very happy with right now.
Well, Kurt, even if there are people saying that Meta is late to the AI party, if you look at shares year to date and you compare it against the others in the Mag 7, we are seeing it as the best performing stock, the second best performing stock right behind NVIDIA. What do you think has really propelled it forward to that magnitude here?
Well, I think there's a couple things. One, there's the Mark Zuckerberg factor of this. You can love him, you can hate him, but Mark Zuckerberg has a pretty strong history of, quite frankly, reaching the largest audience with his products. That is something he's done repeatedly throughout Meta's history, and he has sole control of this company. So if you are a believer in him, you are a believer in Meta right now. And I think that's one factor. And then I think the other is, that reach matters a lot when you're talking about AI, because when you build, in this case, Meta AI is the name of their chatbot. They have put it into Facebook, Instagram, WhatsApp. It already has 1 billion monthly users simply because they have that existing audience. So where a lot of companies are building these AI products and then trying to find the audience for them, Meta already has the audience. So when they figure this out, when they, if their Ray-Ban glasses, for example, take off in the way that they hope they will, they have the built-in online audience already for these tools. And I think that that's something that a lot of people are optimistic about.
Kurt, you mentioned WhatsApp. Boy, I think I was covering the stock when they bought WhatsApp 7-8 years ago. Are they finally starting to monetize WhatsApp? And if so, how are they doing it?
They are starting to monetize WhatsApp. They announced in June that they're going to start running ads in WhatsApp for the first time. If you're a history buff in terms of following Facebook history, you'll know that that's been a long time coming, and there's been a lot of bumps and bruises along the way in getting there. But I will say the CFO, Susan Lee, she did warn yesterday on the earnings call that even though they are putting ads into WhatsApp, this is a long road. It is not going to be a material impact for the business in terms of revenue or ad impressions for the next few years. They're going to start slow. I think that makes sense for a couple of reasons. The first being that WhatsApp is popular in a lot of regions that aren't necessarily lucrative in terms of advertising, India, Brazil, places like that. And then second, you're kind of trying to convince advertisers to shift budget perhaps from more lucrative things like Instagram or Facebook. And so I think it's going to be slow for people to maybe move over their money towards WhatsApp. But again, fast forward a few years from now, I think there is obviously potential here. That app has a multiple billions of users globally.
Kurt, it's hard to be a bear here on this stock. I'm looking at Wall Street ratings right now, 74 people have a buy. We have 5 holds on the stock and then 1 sell, and that's coming from BNP Paribas. But if you really had to dig in and see what the overhangs could potentially be here for this company, what would you say are some areas that investors are looking to see a bit more of a push forward?
Well, I do think the spending is a lot. And so while the ads business continues to chug along, people are going to say, okay, that's fine. If there is a stumble in this ads business, heading into the holiday quarter or something like that, suddenly people might start wondering, why are they spending so much if the ads business isn't delivering? So that's one. The other is their Reality Labs division. That's the Quest VR headsets, things like that. That is a loss leader. I believe $4.5 billion in losses just last quarter alone. They also mentioned on the call that Quest sales were down year over year. So that's a concern, I would imagine, for some people.
Kurt, thank you for your reporting. Appreciate it. Kurt Wagner, tech reporter, Bloomberg News in Denver, Colorado. I'm never driving I-70 again up to the mountains again. I made that vow a year or so ago.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's talk a little bit healthcare here. Eli Lilly, I mean, it's all about like the obesity drugs. Who's the winner? Who's the loser? How big is the market? But there's a lot more to talk about. I don't know. Damian Garde, he joins us here. He's a healthcare reporter. Eli Lilly, the blockbuster diabetes drug Mounjaro, fell short of expectations that it would do a better job at preventing heart attacks and strokes than its older medicine, Trulicity. Is that a problem, Damian?
It depends on how you look at it, but it does underline, I think, what you mentioned, that the bar is so high for these medicines, both commercially and clinically. So what we learned today, Lilly ran a study comparing Mounjaro, the newer GLP-1 combination medicine, against its older GLP-1 called Trulicity to determine whether it worked as well in preventing heart attacks and strokes. And the good news is the study met its goal. It proved non-inferiority is a scientific term, which is to say it did just about as well as the older drug. The bad news through the lens, I think, of a lot of investors is it didn't prove to be superior, which was kind of the, if not expectation, then kind of hoped for outcome here.
Mm-hmm. So what's the biggest business here for Eli Lilly? I mean, is Mounjaro one of their front-running drugs that we're talking about here?
It is. So Mounjaro it's a little tricky because it's the same basic medicine, but when it's used for diabetes, they call the drug Mounjaro. And when it's used for obesity, they call it Zepbound, but it's the same scientific molecule underneath it all. And that combined is by far Lilly's biggest growth driver. And it's a medicine that is in demand. It was until relatively recently in shortage officially, and it is definitely paving the path to Lilly becoming the most valuable drug company in the world. And it's also outpacing Novo Nordisk, the Danish company that really invented this market that's also had a lot of unfortunate news in recent years. Lilly is lapping the competition there and is on pace, it's assumed, to kind of dominate this market, at least in the near term.
So I'm looking at the PGEO function on the Bloomberg terminal. It kind of breaks out kind of where the revenue comes from, either by business line or by geography. Cardiometabolic health. That's their biggest revenue line. Is that the obesity stuff?
Yeah, that's inclusive of obesity and diabetes.
All right, dude, I mean, look at this. Let's go 2021. That had $13 billion in revenue. Okay, good business. 2024, it had about $30 billion of business. Expected to be $43 billion this year, $52 billion next year. Holy cow. That is out of control growth. No wonder they're so valuable.
Well, exactly. And that's what we've demonstrated, what Lilly has demonstrated in sales just with the products that it has on the market. But I think when you look at the company's valuation, what's being priced in is a soon to come oral GLP-1. So they would have a pill.
That's what we're talking about.
That could win approval next year at the earliest. And that is likely to both be a massive commercial product for obvious reasons, but really like democratize this therapeutic category, because these are all injectable medicines that we're talking about.
I am, as the injector of this medicine on another person, which I enjoy. I get a cocktail out, we make a little party out of it. But the oral thing, that's going to open up the market like crazy, I would think. Because there's probably a lot of people that don't want to inject them.
Don't enjoy doing the shots.
Yes.
I mean, because a lot of people don't like needles.
Yeah. And it's also going to probably diversify it. So a lot of the focus on these medicines is what percentage of weight loss do they drive? It could get up to 25%, for example. But for a lot of people, they don't need to lose 25% of their body weight. The pill seems to have a lower percentage body weight change, but the assumption is that there's a huge demand for that, and that when there's a multitude of these medicines, the heavy-duty ones versus the lighter ones, then you could really meet a lot of the demand that people need.
How about all the other stuff in the world, like, I don't know, cancer, dementia? Where
are they in that?
Yeah, where's Lilly in that type of thing?
Well, Lilly particularly does have an approved medicine for Alzheimer's disease, and a lot of drugs for cancer, mostly in the pipeline. That's been a major investment of theirs. But one thing that's notable about the GLP-1s, not to pull it back there, is that we've seen that in the long term, as this study demonstrates, it reduces the risk of heart attack and stroke. But likewise, there are observational studies tying it to reduced risk of Alzheimer's and of cancer, which follows reason in that these drugs basically make you eat less, and in many cases drink less, smoke fewer cigarettes. These are things that we know are behavioral changes that prevent cancer, heart attack, and stroke.
I think it's funny that these things came out at the same time as gummies came out, just saying.
Well, I mean, I think that there's maybe there's a correlation there.
Right.
Just need to find it. But I mean, when we think about this company, how are they in comparison to competitors right now? I mean, this is a massive company here.
Yeah, Lilly, I think, this is a long-term, dating back about a century, investment in diabetes research that Lilly has, and the GLP-1 medicines grew out of. They began as diabetes treatments before they were discovered to have such profound effects on obesity. So I think Lilly would say this is them carrying on the tradition, and their market cap and all of these kind of superlatives we can affix to them are just the markers of a success that they set in motion in years past. I would say other major American drug makers look at them with some envy and perhaps occasionally resentment, because they and Novo Nordisk are the leaders in GLP-1. Pfizer, Johnson & Johnson, Bristol Myers Squibb, Merck, all of the heavyweights of this sector missed out on that first wave of obesity drugs that have really driven the success of the industry in recent years.
And I'll tell you, this is how you see it, Norah. You asked that question, kind of where do you see the difference here? How about valuation? On 2025 estimates, this is on the BQ function, folks, and this comp sheet is curated by Bloomberg Intelligence, so you know it's right. It's the right comps and the right numbers. That's what the BI folks do. On 2025 numbers, Eli Lilly stock is trading at 34 times earnings. The rest of the peer group, 15 times. So more than twice the valuation Wall Street is giving to Eli Lilly versus the other big cap names like, Johnson & Johnson, AbbVie, Merck. So just extraordinary there. Damian, thanks so much for joining us. Really appreciate the reporting there. Damian Garde, healthcare reporter, Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Qualcomm, the company, reported earnings a little bit disappointing. The stock is down 5.8% today, down 2.5% for the year. Let's break down what happened in that quarter with an expert. Kunjan Sobhani joins us. He's a senior analyst, covers semiconductors for Bloomberg Intelligence. He joins us via Zoom from San Francisco. Kunjan, you do this stuff for a living. You see all these companies. Break down the Qualcomm earnings. What did you see?
Yeah, look, there was nothing hugely wrong with these results. In fact, there were a few positives, namely the beat on the IoT due to better smart glass chip sales to Meta and others. Auto still continuing to be on track despite the automotive end market seeing weakness. The handset guide for next quarter, which is to come in line with typical seasonality, which is actually surprisingly positive, given that they are going to have significant Apple share loss starting next quarter. That means that the gains they're gaining in Android, and Android continues to get better for them, for their chip sales. But all of this goodness is still sort of near term or one time. The big questions in investors' mind don't disappear from this goodness. Unfortunately, there is going to be that big Apple loss this year, this calendar year, and the next calendar year that is going to weigh on their top line revenue. And there is no offset to completely offset that loss. So that's going to stay. The diversification efforts in IoT and auto and the PC and the XR, etc., is moving on track, but it's not sexy enough or new enough for in the near term to get investors excited about this name.
And that's what I'm seeing the rest of the street saying as well. I mean, the CEO just said in the interview with Ed Ludlow that they see content in the automotive space accelerating here, but then we see the print that we just are analyzing right now, and the street is saying that weakness in the handset and automotive chip sales sector, that all coming in weaker, has really kind of put in a damper here for investors. How much runway do you think that the company has here?
I mean, they've been pitching this diversification story for a while now. They have, to give them credit, they have made meaningful progress in a lot of these avenues. If the automotive and IoT still looks to be on track to get to that $22 billion target that they've promised. Once you get there, it will be enough to offset all the Apple losses. It's just moving very slowly, which is good. It is still moving consistently, but slowly. And in the times that we are in right now, when an investor in semi has the optionality to look at all the fast growing AI names where most of the spending is coming, it's just very hard to get people excited very quickly about still investing in a company which is still primarily today driven by handset revenues.
Kunjan, what is Qualcomm and maybe some of your other chip names? What are they saying about tariffs? About 30 seconds.
Well, most of the companies in our coverage are not calling out tariff impact directly. Some companies have, decided to take a step forward and call some kind of pull-ins. We heard from Cristiano and Qualcomm is saying they haven't seen no pull-ins. It's very hard to delineate because, initially from our channel checks, we believe there were some pull-ins because of tariff fears. But as the discussions and the news has sort of died down, the risk for that has reduced. So the consumers which were initiating pull-ins might have normalized. So we're not seeing a lot of impact on the semi space for the most part from tariffs, except for this movement between 2Q and 3Q demand.
Kunjan, thanks so much for joining us. Kunjan Sobhani, he's a senior analyst covering the semiconductors for Bloomberg Intelligence based out there in San Francisco.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Comcast reported results here. I guess they lost fewer subscribers, and that's kind of a net win. The stock's up 1.6% for the day, down 12% for the year. It just feels like there's a lot of headwinds for this industry, the cable TV/broadband industry. Geetha Ranganathan, she covers all the media stuff for Bloomberg Intelligence. Geetha, what do you see from Comcast numbers today?
Yeah, thanks so much, Paul. So what happened really was last week we had Charter, which is the second largest cable or the second largest broadband operator reporting. They reported broadband subscriber numbers that were extremely weak. Losses were much higher than what the investment community was expecting. That triggered a 30% plunge in Charter stock price and generally spooked Comcast investors as well. So there was a lot of kind of panic and nervousness coming into today's report. And Comcast did lose subscribers. They in fact lost the most number of subscribers that they ever have lost in their broadband business, but it was still better than what the street was fearing. And that's why we're seeing a little bit of what you can call a relief rally here for Comcast.
Absolutely. I mean, what is the broader market looking like right now? I mean, you've compared it against Charter, but how are we thinking about broadband right now?
Yeah, so broadband really has been, at least over the past few years, Norah, has been completely dominated by the cable industry. So just, even up to 2 or 3 years ago, cable had almost a 67% share of the, home broadband, what we call the fixed broadband market. But with the telecoms, so with AT&T, Verizon, and T-Mobile coming in and becoming extremely aggressive in terms of two of their product offerings. So one, which they call fixed wireless, which is basically, also called 5G home internet, and the other being fiber. And with both of those, on the fixed wireless, really from a pricing perspective, because they're only charging about $50 or so a month. So they're really competing with cable on the low end. And then if you want a superior product to cable in terms of both upload and download speeds, you go for fiber. So they're really attacking cable from both ends. And that's where we're seeing kind of this intense competition for the cable operators like a Charter and a Comcast that have been losing subscribers really at a pretty, alarming pace. The problem is that they're going to continue to lose subscribers. And that's kind of how we're framing it for the cable investors right now.
All right, Geetha, Comcast is a big company. It's a diversified company. It also owns NBC Universal, but that's also a challenging part of the business. Where are we in terms of that company maybe selling or splitting off some of their cable network businesses? What's the status?
Yeah, so they are spinning off their cable networks business. That is their most challenged portion of the whole NBC portfolio. They are spinning it off into a company called Versant. That should happen a little bit later this year. So once that happens, then you're left, as far as the NBC asset mix is concerned, you have the broadcast network, which is, the NBC broadcast network. You have Peacock, which is their streaming platform. And then you have the slightly higher growth assets. So remember, they are investing very big in their theme park business. They just opened Epic Universe, reported some really stellar results today in terms of revenue growth, thanks to Epic. And then, of course, their studio business. I don't know if you saw the news, but they already have one of their movies, Odyssey, which is a Chris Nolan movie for which they're pre-selling tickets a year in advance. So their studio business in really good shape as well.
So executives have acknowledged that competition in broadband still remains quote unquote intense, especially when we think about other wireless companies like AT&T, for instance. And we're seeing shares down for Comcast, down about 11% year to date here. How are we thinking about competition as it relates to Comcast?
Yeah, competition is going to be a huge factor for Comcast down the road. So, Paul talked about Comcast being a diversified company. Yes, they have exposure to, the cable systems, but they also can diversify a little bit with NBC. But still, cable brings in 80 to 85% of the company's EBITDA. So it's really important for them to have some kind of visibility into their broadband business. So again, competition is intense. Both Comcast and Charter refer to this. It's going to continue to be intense just because we're seeing very, very aggressive fiber rollouts from all of the telecom operators. So we don't necessarily expect the cable broadband business for Comcast to return to growth. However, they are trying desperately to kind of really curb churn. And so we're seeing them kind of really, go very aggressively after promotions, kind of tweak their pricing and packaging strategy. So that's kind of going to help them defend their turf a little bit, but I'm not necessarily sure it's going to be a game changer. So competition is a huge issue for them.
Have you been to Epic Universal yet?
Not yet.
We got to get her over there.
We got to
Bring
go
me
down there. Yeah, so we'll see. All right, Geetha, thanks so much for joining us. Geetha Raghunathan, U.S. media analyst for Bloomberg Intelligence.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.